Have you ever wondered if all the legal work your corporation does in the year has any effect on your financial statements? And if you can put all this legal work to some practical use? Well, the answers are yes and yes. But the bad news is you not knowing this stuff can cost you in many different ways. And that's what today's video is about, is making sure it doesn't. Hey, how are you? I'm Duncan McPherson, and welcome back to my channel. Today is the first in a series of videos where I will lift the veil on the interrelationship between your legal work and your financial statements, and how you can put all your expensive legal work to practical use. And as always, if you're a US business trying to survive in the Canadian tax jungle, click on that subscribe button and hit the notification bell. Or skip the hassles and reach out to me directly at MacTax.com for more personalized service. Now, a little bit different this time. Please note to support this video series, at MacTax.com under the heading CFO Toolkit, you'll find information, details, and explanations that reinforce the content of this video. So make sure you check that out as a supplement to what we discussed today and hereafter. Now, today's video will deal with how your legal work affects your financial statements. And the next video is how you can put that legal work to practical use. And by practical, I mean use it to make money. So a little background for you. Your financial statements are meant to reflect your underlying legal realities of your financial transactions that your company completed during your fiscal year. Got it? But your financial statements by themselves do not create legal reality. In fact, the implications of this, regrettably, are not understood by many CPAs. A very basic example would be when you book interest expense because you made a loan payment to a related party. You booking a payment as interest will not make the payment deductible. What makes the interest deductible is a binding loan agreement between your company and the related party. Do you see how, in this case, your financial statements were meant to reflect enforceable legal realities, not create them? This legal accounting synchronization is commonly misunderstood in both your country and mine. But that's exactly why, if you understand it, your business will have an edge over its competitors. Now let's talk about your company's balance sheet. Your balance sheet is only as reliable as the legal work that supports it. And if the underlying legal work is weak or ambiguous, your balance sheet will be deemed potentially misleading or worse, non-compliant, and ergo, not useful for running your business. But don't worry, because I'm here to help you avoid this. Now, your balance sheet starts with assets, of course, but what exactly qualifies an asset as an asset, right? Well, my friend, that depends on your enforceable legal right to that particular asset. For example, if you purchased a machine for $1 million, the purchase and sale agreement you entered into for that machine and your company taking title to that machine are legally what entitles you to claim that machine as an asset, not the fact that you wrote a check for $1 million for that asset. If someone wants to know if you own that asset, they want to see your purchase and sale agreement and the title documents, not your check. Otherwise, you could write $1 million check to yourself and call it a machine on your balance sheet. Well, that still doesn't make it an asset. Make sense? So that's the example, and here's what we're going to do now. We're going to gather all the legal work that relates to your balance sheet assets. For now, I'm just going to give you a partial list to jog your legal memory. But make sure you check out the full list on my website, themactax.com, under the heading CFO Toolkit. And now for that partial list, and I apologize for reading off of my cheat sheet. Again, go grab. Number 1, all your insurance policies, including surety and property and casualty. Number 2, your long-term rental agreements for any real, personal, or intangible property. Number 3, your loan agreements if you lend to a related or third party. Number 4, your purchase agreements for large dollar assets. Number 5, your rollover legal work for your assets that were bought via an IRC 351 type exchange. Number 6, for your subsidiary corporation, get its minute book. And number 7, get your holdback agreements and other deferred charge agreements. Now that's only 7 items, but check out the entire list at themactax.com. Now, where appropriate, have your bookkeeper compare your legal documents to the respective items on your balance sheet. And when they don't agree, your bookkeeper must log the discrepancies. Then have your CPA determine what to do about the discrepancies. Got it? Okay, good. Now let's move on to your liabilities. Your liabilities also rest on legal form. Your loan, for example, is not a legal liability unless there's a signed loan agreement that specifies repayment terms, interest obligations, and/or collateral. So here is a partial list of your liability legal docs that I want you to go gather. Again, the full list is on my website, themactax.com. Click on the heading CFO Toolkit and see the link for Balance Sheet Legal. See you there. Now, I apologize for reading off my cheat sheet, but for now, go get your number 1, your loan agreements. Number 2, your lease agreements. Number 3, your intercompany loan agreements. Number 4, your holdback agreements. Number 5, your agreements to support deferred charges. Number 6, your legal work that backs up your litigation reserves and other contingent liabilities. Number 7, your agreements or obligations for site cleanup and restoration. And number 8, your legal work that backs up warranty reserves. And once again, have your bookkeeper compare the legal work to the liabilities on your balance sheet. Log the discrepancies and hand the log to your CPA for resolution. Okay, now let's move on to your balance sheet's equity section. And by now you know the drill. Go get your company's minute book, your stock option agreements, the details behind any third parties you paid by issuing shares, and then go to the MacTax.com and click on CFO Toolkit for the bigger list. And one more time, have your bookkeeper take a look and log the discrepancies between the legal work and your equity section, and hand the log to your CPA to fix any discrepancies. Okay, at this point, this video is getting too long. So for the legal list of stuff that supports your income statement and cash flow statement, I'm not getting into it here. You got the idea, right? Just go to the MacTax.com and click on CFO Toolkit and see the link for income statement legal and cash flow statement legal. Have your bookkeeper do the same work as I mentioned for the balance sheet. Compare, log the discrepancies, and hand off the log to your CPA for resolution. Now that you got all your legal work in one spot, you must take copies of all of it and store it in your file called Legal Accounting Recon. And from this day forward, know that your legal accounting collaboration is not optional. Historically, your legal and accounting team have worked in silos. Your accountants manage the numbers while your lawyers handle the contracts. But what you should realize by now is that they are inseparably integrated. For this reason, you and your company must move forward with the more integrated legal accounting view. And from now on, all your financial reporting will be supported by legal work. And all your material transactions are validated not just through accounting standards, but through legal substance as well. But you know what, my friend? That is it for today. And if this video caused you to view the running of your business a little differently, and that you may need to talk to me sooner rather than later, well, since you're running over to grab the CFO Toolkit anyways, just contact me through the MacTax.com as well while you're at it. And let's collaborate on taking your company to the next level. And of course, hit that subscribe button for more tax savings tips. Until next time, stay sharp, stay compliant, and stay out of tax trouble. And I'll see you on the next video.